What is up, guys? I know it's been a minute since I've uploaded. I do apologize. It's more of a mental thing, really. Nothing, nothing's really held me back but me. But I just kind of want to make this video, just kind of explaining like my recap for the week of August. I think it was the 17th through the 21st. I just feel like there was a lot of opportunity, but I just want to kind of show you the pros and the cons. Also, I've kind of updated my strategy a little bit. When I say that, I don't mean I've changed my strategy. I've just made a little bit of tweaks. Tweaks to improve, not tweaks to change. Sometimes I know that people will hear that, oh, I updated or I changed my strategy. You don't want to hear that a lot when listening to someone, only because if their strategy changes all the time, they there's no way they're a profitable trader. Now, making tweaks to your strategy to improve it, yes, that helps. But more or less, you don't want to see someone that's constantly adding something new or kind of just changing it up a lot, if that makes any sense. But I just want to show you guys my strategy. I've been basically focusing more on higher time frame. That's basically the tweak. And no matter where you go, if you're focusing on a higher time frame, you're going to see a higher win rate. If you're focusing on a lower time frame, you got to kind of incorporate a lot of things. It's not just an easy, simple fix when you're playing with just a 5 minute and 1 minute. You need to also use like higher time frame, like hourly, 50 minute. If you want to go even higher, the daily and the 4 hour. But just kind of just do this. I'll kind of give a little bit of elaboration on some of these things, but I'm not gonna go too deep. These red lines are basically just saying it's at 9:30 when market opens. I am just looking for a bias on the 1 hour. I'm gonna just start from top to bottom. In the hourly, I'm looking for overall, bias. What's going on? What just happened? What is market showing me? The only way I'm gonna know what market is showing me is when I start drawing things out. Now, yes, sometimes it can be crowded when I'm looking at the market and I'm putting all these lines. And I want to go ahead and let you guys know. If you hear me guys for air, I'm wheezing a little bit. I'm sorry I'm not a grown man yet. I still got asthma. But besides that, um, that bias is what's going to help us so much. Hourly, you need to look for that. What's going on? Was there a sweep? What's the trend? That's the most important. What's the trend? Is there a sweep that just happened? Is there any order blocks that I need to be worried about? Is there any fair value gaps, inverse fair value gaps? Is there anything that is going to stop me from my bias being correct? That's what we're looking for. We'll scale down here in a second, but let's just go ahead and do that. What happened previous to New York session open? Well, as we can see, there we are. This is a high, and then this is a high also. But the difference in these highs is this is a firm high, and this is a high that got rejected, as in we created a liquidity sweep. Price is basically letting us know that sellers are now in control because buyers just wasn't putting enough effort in. Also, with that being said, we caught a breaker structure to the downside, and it's with a momentum candle, just more confirmation that we are in a reversal now. Now, am I saying a reversal for the entire trend? All depends on what market continues to show us. But for as of right now, for as of this day, we are in a reversal. Also, what else do we see in the 1 hour? We can also see that there is a fair value gap. And let me go ahead and fix what I just explained to you guys. Cool thing is, I'll show you this too. This is really something that you might want to use. When I am going from wick to wick, that is a sweep. When I'm going from wick to body, that is a breaker structure. In a scenario, this is what we're looking at. And then you need to use this for every single situation. Obviously, blue and black, this is a high. And then black and then blue, that is a low. You always want to go off the wicks to see if it's a sweep or a breaker structure. Wick to wick, like I said just a second ago, that is a sweep. Wick to body, that is a breaker structure. Obviously, we're in the higher time frame, confirmation. So fair value gap gets hit at some point in time during this consolidating phase, but I also want to show you this. What is some other things that we can see that happened previous to New York session open? We got the sweep, we got the burger structure, and then also we're seeing that these lows are starting to become manipulated. They're basically being wiped out to where basically these are mitigated lows. Mitigated basically means that price has tapped these areas. What the world? And now you should never try to target them and use them as like take profits or whatever because there's a high chance price won't probably go back to these zones. In a scenario like this, the reason I'm speaking about it, I'm about to get to that. So as we can see, we took out this low, and then we also took out this low. So if I'm saying that market opens and we've already taken out these lows, what should I be, what should I be doing? Well, one, I still haven't even drawn down to a lower time frame. But two, where would be my next target point if need be? Obviously, we have a target point here, but we just realized that price is reversing. My next target point would be here, the next low. And for the people that are like, oh, I want more money, the next low. Now, in a scenario like this, I'm looking for liquidity, is where my target is. I'm not just looking at, oh, it's this low. No, we're in a reversal. That would be liquidity. All right. Since we've covered all the bases, let's go down to the 15-minute. Now, key thing I want to go ahead and involve, you should never be sitting here trying to put in all this right when market opens. You need to be doing this analysis before market opens. Now, anything that I'm showing you should have been pre-market analysis. It shouldn't have been something that just happened after market opened. So now that we got everything marked out, where should we be looking for a sweep in the lower time frame? We should be looking for a sweep in the lower time frame. I don't know. I just confused myself right there. All right, let's start over. In the 15-minute, we're looking for a sweep candle and we're looking for a big rejection candle. Now, when I say a sweep candle, I'm saying something that either swept a previous high or a candle that just created a high and now that candle swept it. So, for example, right here, and kind of excuse everything, let's just do this. Okay, so if market open is right here at 9:30, and then we see prices just kind of choppy. I mean, it's just rejecting from highs, rejecting from lows. We obviously understand in a higher time frame we were looking for sales. So where is a key level that I should realize that I need to look for a selling point in with confirmation with a liquidity sweep? If we know that liquidity sweeps are whenever price gets to a high or a low and then creates a rejection, that's just our signal right there. So let's put everything back on here. Prime example, right here. This was a high and a low. Jesus. All right, there we go. You could have used this one, but that's not even a high. That's a low, so just invalid. Unless this candle right here is blue, it's not. Okay. So in this scenario, yes, we do see a body break, but I'll tell you this. Good way to identify if breaker structure works, and it's just confirming a way to know if breaker structure is a confirmation saying that we are making a change is whenever the body of the candle breaks with like a big candle, not a big wick, a big candle, like a body. I cannot get that out. So notice in this scenario, yes, this was a high, and then this is where the body ended. That's not a strong confirmation saying that now we're going back to the upside. This is a weak confirmation because the body started getting smaller as we progress higher to this sweep. So would I consider this a sweep or would I consider this a breaker structure? I would consider this a sweep. Um, Going forward, after I see my sweep with a rejection candle, also, let's just kind of look at it like this. I'm really just going to explain everything, and I'm kind of going all over the place, but I'm going to explain everything on Monday, and then when we get to Tuesday, I'm just going to be kind of shortchanging, and then I'm just kind of go through the whole, excuse me, the whole week. So, with this liquidity sweep, now that we've identified that in the 15-minute we see a liquidity sweep, we see higher time frame confluences, we are going to say that we have confirmed that our confluences are just adding up. So let's go ahead and go to the 5-minute. In the 5-minute, the main thing I'm looking for is a sweep candle close and a rejection candle close, and then I'm entering. There is no questions asked. If 1 hour and 15 minutes have already aligned, the only thing I'm waiting for is confirmation on the 5-minute. So let's look for it. Okay. So if we saw that on 15 minute, this was that sweep. And then I just said that we're looking for a rejection candle, a sweep candle close, or a rejection candle close. Well, this is confirmation right here. And this is what I mean about that rejection candle. We need a rejection candle in the direction we are going. We don't need a rejection candle in the opposite direction. What sense does that make? Why would I sit here? Why would I want to see that buyers in control when I'm trying to make a sale? Why would I want to see sellers in control when I'm trying to make a buy? Doesn't make sense. So, in a scenario like this, what we would have done is the moment that the sweep occurred, and then we draw down to the 5 minute, and we saw the sweep happen once more, but with a rejection candle, we would have entered off the close. Stop loss, we would have went back to the 15 minute, put it at a secured high, and then draw back down to the 5 minute. Now this is where this is the fun part. Where will we have targeted? I mentioned this in the beginning, and I'm gonna say starting off, we're gonna look at where we wouldn't have targeted. God, I cannot think. So obviously we're not gonna target it this low. We're not gonna target it this low. Yes, we would have hit take profit, but what was the point of sitting here going through all that analysis just to take a 2 pip trade? Because Nasdaq moves, man. And as you can see, let's just show you if we would put it at the correct take profit, which is where liquidity was. We would have banked on this trade, and this would have been so 182 all the way down to 84. So this was a 148 pip trade. Do you know how much money that is? It's a lot. It's a lot whenever you're using like $20,000. It's a lot when you're using like $40,000. I mean, this we're talking about you can make $3,000 off of this trade easily. You can make $10,000 off this trade easily, but that's not my ratio. Typically, I would say my ratio is about like a 1 to 3. So like I want to lose, I would risk. I don't want to lose. I would risk about $1,000 to make $3,000. Um, Now there is sometimes where I'm going to be in a 1 to 2, where I may be trying to get to $3,000, but I'm going to risk $1,500. Do I like seeing those numbers getting higher with the risk? No, I don't. But I'm not going to lie, the strategy just works. It's just clean. It looks good, and it just work. It just works out. I can't complain. All right. Now I'm not going to do the same thing like I did on Monday, but I'm going to go ahead and go to Tuesday. All right. I'm going to do this quick. And this is a good way I can explain it because as you can see on the hourly, there's not as much stuff we're going through. But obviously, in the hourly bias, we could see that we are in a downtrend. It just continued. So, in this scenario, the only thing we're seeing right here is that there was a high, there was a low, there's a high, there's a low. We kept creating breakup structures. The only thing that is different is the fact that we see a fair value gap. Bing, look at that. That's nice. Other than that, target points, we can mark this one out. And now this is like something that you can do. I wouldn't recommend it. Like, this is what I would do. In a scenario where we see that there is no low, as in somewhere we can target for a take profit, if there is a setup, we need to look left. So if I see previous data, regardless if it was freaking 5 years ago, it's showing me that there was a low all the way back here and we're real close. Yeah, you best know that I'm targeting that darn thing. I don't care if it takes 3 days to get to there. If price is showing that it's close enough. Let's draw down to the 5 minute. All right. This is stupid key. I mean the 15 minute. Remember when I just said the main thing I want to look for is a rejection candle. Yes, up here we see that rejection candle, and yes, it hits the fair value gap on the 1 hour, but this is previous to 9:30. I'm not entering before 9:30. But freaking what's amazing is we still see that rejection candle previous to 9:30. We also see this high right here on the lower time frame get a sweep. So is that not beautiful? Is that not? So it makes it even better. We get a sweep candle and we get a massive rejection candle. Dude, what more do I need to ask for? Okay, we draw down to the 5 minute. Yes, we see it's confirmation once again. Sweep candle, big rejection candle. We enter off the close of the rejection candle. Stop loss above the high. Targeting liquidity. Bang. Stupid trade. Stupid trade. Let's go to the next one. This one, all right. I'll explain a little bit on this one because you guys need to understand this. Good grief, that just scared the crap out of me. I didn't know what happened. Excuse me. Okay, this one's pretty cool. So, looking at the market from the hourly time frame on Wednesday, and I know I'm not looking at news, it's totally fine. I just want you guys to see this. Yes, we see a massive candle to the upside, then we see a massive candle to the downside. Can I'm over here asking like if this is a class, can anyone tell me what this is? You get 5 seconds. Main thing is there's a lot of liquidity right here. There's a lot of highs that have not been manipulated. And when it did get manipulated, it still was considered as a sweep because it was weak rejection. So then this high was still available. It was still free. It was unmitigated, has not been touched. It's a value of area of value, the best way to put it. Resting orders, the best way to put it. Liquidity, best way to put it. So let's just look at it like this. All this right here was ready to be swept so it can continue in the trend. That's what consolidation is. Manipulation, accumulation, manipulation, distribution. But this was trash, I'm not gonna lie. It's not clean, but it works. Okay, so after all this was manipulated, we can go down. Hold on, I'm rushing it. I'm rushing it. Where can we target? Um, Obviously, this is the only low that we can truly target because market was right here. That's not somewhere I want to look at, but I'll still show you because we got people that just like having fun. All right. Do I need to look left in this scenario? Absolutely not. Because if you think I'm waiting for price to get down here, not working, Buckaroo. Not working. All right. 1 hour has been identified. Now, this is the cool thing. In the 15-minute, we're looking for either a liquidity sweep, um, a sweep candle, or a big rejection candle. Okay. So in this scenario, if we saw that in the higher time frame, we had a liquidity sweep, and then we saw a big rejection candle. Now this is obviously previous to 9:30, so this you wouldn't have seen this. But let's say if it's printing out as we speak. Yes, we didn't see no sweep, but we had a higher time frame sweep, which is good. Did we see a big rejection candle? Yes, we did. Did it come with a little bit of a wick, but in a scenario where this wick was from 76 to 25, that's a big 50 pip rejection wick. Also, this is a big body for rejection. So I'm pretty sure that we are going to go down in this scenario. Um, some people argue saying that you're just taking risky trades. I mean, yeah, I do take risky trades, but some of these are cut out just to be W's, and I'm not going to argue with that. All right, another scenario, 5 minute. We did not get a sweep, but we got a big rejection candle. We see a wick. We see price just wanting to continue to the downside. We got confirmation that this was a sweep, and we did get confirmation that this was a break structure. And it's clean, dude. The moment that we saw the body break, I mean the body close on the 5 minute, we would have entered, even though this was 9:30. Entry right at 9:30 body close. Stop loss above the high. Take profit at that low. Just clean, man. I mean, I don't know how much more you can ask for me. And this is free. This is free. This is free. Free wisdom doesn't mean that you're gonna make money from it. All right. So, Thursday and Friday. This is just something I'm going to explain to you guys. Yes, there was money you could have made here, but this is when you're forcing it. The reason I didn't put entries on these days is really because you don't need to take a trade every single day. Number two, if you believe that you play with these markets and believe that you have to make money, you've already lost. I used to believe that I had to make money every time I touch the market. No, the moment you believe that the market owes you something, you're gonna be paying the market well. You are gonna be liquidity, my boy. There's a reason my name is I am Lick. I am sometimes liquidity because oh man, they've had some fun with me. And I'm not talking about some little measly $1,000. They've got some money from me, that's for sure. Um, but hey, I get to trade with the big boys now. So in this scenario, this is forcing it, but I'll show you how you could have done it because sometimes you guys are hard headed. You'll be the guy that I used to be, and sometimes still be if I'm greedy. But I learn from my mistakes. In a scenario like this, let's see, we don't see nothing but we see confirmation to the downside. That's obvious because we're in a downtrend. With that being said, what we can take away from this is here is a order block because there's a high and a low, and there was a big expansion that came to the downside. Here is a fair value gap. All right. Is there anywhere to target? Yes, there is. Here is a low previous to market open. We go to the 15-minute. All right, what do we see? What do we see? Now this is real cool because a lot of people don't understand this, but I found this out recently. There is certain protected highs. Oh, there's protected eyes. That's crazy. Protected highs that will never get hit only because price is saying no. We do not want to go above this high, or no, we do not want to go above this low, specifically because of this right here. All right. So this was an order block. The moment that price hit this order block, we had a rejection immediately. But that doesn't mean that buyers are still not in play. Buyers and sellers were just fighting back and forth. Right here, right here. Buyers to control this candle. Sellers decided no, we're not going any higher. And then there was an expansionary that got rejected, ended up being a sweep. So in a scenario like this, here's our sweep candle. Here is our bright candle. Oh, gosh, dude, I'm just clicking everything. Yeah. Here's our bright candle. Now, yes, this is a 15-minute. I'm just showing you guys that we are still in a selling trend. But I'm showing you how you don't end up becoming liquidity. Whenever you see a high that is like basically like fighting for like you see a multiple highs and lows that are fighting for its life to make a decision. If price never decides to sweep this high, these highs will get swept and then price will move in its trend. The reason I say that with confidence is because I've seen it happen so many freaking times on the lower time frame. We'll create so many highs and lows, and then we'll have one high in a downtrend setting, one high that will get swept, and then price just tanks. Well, like I said, this may not look like a lot of money to you guys. There's a lot of money to be made in this little bit of area. We go down to the 5-minute. All right. Now, like I said, this is ugly, but some of you guys don't listen. So, in a scenario where we just watched all these highs and lows just get created, and then one high got swept, and we didn't break this high, where would Big Q enter? And why did I call myself that? We would have entered right after the rejection wick. I mean, rejection candle. Stop loss above the high, targeting the low. Now, that 1-to-1, that is trash. That is an ugly setup, and I would have been in this thing forever. But you would have known what? Q would have made his money though. Not big Q. Q just would have made his money. Right here. Here's another sweep. This is a lower time frame analysis. I'm not telling you guys you should do this. I'm just saying, hey, look, opportunity is on the table. If you're that risky guy, like I am, go bananas. All right, after we've seen all this accumulation, all these highs and lows get manipulated, like I said just a second ago, there is one high that is protected. That would be this high. There is one high that is not. So after we've seen that, we would have entered again because we just got rejection. Well, rejection candle. I probably would have done it on that one. But just to be, um, just to make it clean, I probably would have entered right here and then waited for it to hit TP. And like that, we would have called two trades and not been in a bad situation. I'd say it like that. Um, I'm not really promoting this for you guys to like actually take action like this. I'm just showing you how there's opportunities to look at the market, and if you want to be risky, hey, by all means, be that guy. If you don't want to be risky, listen to the first three trades that I showed you earlier. But in this scenario, there's opportunity. And also, if you ain't seen, I'm not trading directly at 9:30. There's sometimes I'm trading at 11 o'clock. There's sometimes I'm trading at 9:30. There's sometimes I'm trading at 10. Some of you guys don't have no patience to realize that you're not always going to see everything happen right then and there. But that's totally up to you. Ain't nobody forcing you. Last trade, or last opportunity. On Friday, we do see similar situation. Price ends up sweeping liquidity, well, sweeping lower time for liquidity, but we also end up, kind of hitting this order block. With that being said, I'll just do it like that. Price could not go above it, so that is a liquidity sweep. We ended up getting a bigger structure to the downside. This is just higher time frame. Now, cool thing is, so remember what I said. There's some protected highs and there's some protected lows. These lows were not protected. This low was protected. Obviously, buyers did not want sellers to keep pushing the market lower. So, what did buyers do? They stepped in. This is all liquidity being swept, except for on a higher time frame. So, I mean, this is higher time frame liquidity sweep. But what I'm saying is, this is a protected low. So, in this scenario, like the 15-minute, do we get a rejection candle? Yes, we do. All right, get it at 5-minute. I'm just being quick with it. Now, do we see a rejection candle right here? No, we do not. But do we see a liquidity sweep rejection candle? Now, yes, we do. This is a low. This is a protected low. Liquidity is swept. Candle closes. Entry right here. Stop loss below low. Now, where would I have targeted my SL? I'm going to take profit. You'd be surprised, but it would be right here. Only because this is an order block. And I'm gonna tell you right now, I actually took this trade. I actually targeted this to take profit, but since I was risking so much, this is my stop loss right here. You see how stupid this is and how horrible this looks? Now, why was I moving my stop loss this tight? Because I was risking a lot of money. And because I was just trading emotionally, I got bored. I had this bad problem where I'll get really, really bored. So I'm like, let's want to trade. Yeah, you need help, Q. You really do, because it ain't worth risking that account. But that's just my flaw. Sometimes I just want to press the button. Bad addiction, not gonna lie. But if I actually would have kept my stop loss where it was supposed to be, originally, regardless of how much I would have risked, we would have been in gold, my boy. But was this a strategy I wanted to trade? Absolutely not. Even if it's clean, I no. No, if it's clean, yeah. But if it's not clean, no. Like, this is why I love trading liquidity sweep, because it's just, there's no way around it. There's money to be made, and it's totally up to you. But that's it for me, guys. I really hope that you learned something for this video. Once again, I do apologize for not being here. To all my followers, I really respect you guys. I appreciate you guys, and I love you guys. God bless. Also, choose to be a man of God, choose to be a woman of God. Keep your faith high. Don't allow the people of the world to encourage you to be something you're not, because it's truly easy. Whenever you fall, understand to get back up, and get up so fast that the devil never knew where you landed. What that means basically is, we always get real hard on ourselves when we make mistakes, but that's, I'm not going to say that's the enemy's job to be hard on us, but it's not our job to just criticize us and do the enemy's job, is what I'm getting at. Make your mistake, get up, talk to God about it, feel renewed, ask for forgiveness, and walk in the Spirit. Out of that flesh the next time. That's a blessing for me. But I'm out, you guys. Once again, like and subscribe. On to the next video.